Look, I need you to pay very close attention to what I'm about to share with you, because what's unfolding right now in the global financial system isn't just another market cycle. This is something fundamentally different, something that happens maybe once in a lifetime, if you're lucky enough to recognize it when it arrives. You've probably heard whispers about a reset coming. Maybe you've dismissed it as conspiracy theory nonsense. Maybe you've wondered if there's any truth to it. Well, let me tell you something that should make your ears perk up. Central banks around the world are accumulating gold at a pace we haven't seen in over 50 years. Not just buying a little here and there. I'm talking about systematic, aggressive accumulation that suggests they know something the average person doesn't. The numbers are staggering. Central banks added over 1,000 tons of gold to their reserves in recent years, and they're not slowing down. China, Russia, India, Turkey, Poland, these aren't random countries making random decisions. This is coordinated preparation for something big. And when I say big, I mean a fundamental restructuring of how money works on this planet. Now, before you think this is just fear-mongering, let me walk you through exactly what's happening, why it matters to you, and what you need to understand before it's too late to position yourself properly. The current monetary system we're living under was essentially created in 1971 when President Nixon severed the last link between the dollar and gold. That moment, that decision, created what we call a fiat currency system, where money is backed by nothing except government promises and military might. For over 50 years, this system has worked because the world agreed to use dollars for international trade, especially oil. This created what's known as the petrodollar system. But here's what's changing, and why it matters so much. That agreement is falling apart. Right now, as I'm speaking to you, countries representing more than half the world's population are actively working to create alternative payment systems that bypass the dollar entirely. The BRICS nations, Brazil, Russia, India, China, South Africa, along with dozens of other countries that have joined or are seeking to join, are building infrastructure for trade that doesn't require dollars. Think about what that means. For decades, if country A wanted to buy oil from country B, they had to convert their currency to dollars first, conduct the transaction in dollars, and then country B would convert those dollars to their own currency. This created constant demand for dollars, which allowed the United States to print money with relatively few consequences because the world needed those dollars for trade. But what happens when that demand disappears? What happens when countries can trade directly in their own currencies, or in a new system backed by commodities like gold? The answer is simple and terrifying. All those excess dollars that have been printed over the past few decades, the trillions created during financial crises and pandemics, suddenly have nowhere to go except back home. And when they come flooding back, the purchasing power of every dollar you own gets diluted. This is where gold and silver enter the picture, and why what's happening right now is so critical. You see, gold isn't just a shiny metal that people like to wear as jewelry. Gold is the ultimate form of money that has survived every empire, every currency collapse, every financial crisis in human history. When paper money fails, and it always eventually fails, gold remains. Let me tell you a story that perfectly illustrates this. In 1980, gold hit an all-time high of $850 per ounce. Adjusted for inflation, that's equivalent to about $3,200 in today's dollars. But here's the fascinating part. Gold today is trading well above that inflation-adjusted level, and yet we're nowhere near the kind of crisis conditions that existed in 1980. Back then, inflation was running at 14%, interest rates were at 20%, and the Soviet Union was invading Afghanistan. The world was genuinely on the brink. Today, we have inflation that's officially reported much lower, though anyone who buys groceries or pays rent knows the real number is significantly higher than what the government admits. We have interest rates that, while elevated from recent years, are still historically moderate, and yet gold is setting new all-time highs. Why? Because smart money, the people who move billions and trillions of dollars, understand that the current system is unsustainable. The mathematics are actually quite simple, even though the implications are profound. The United States has over $34 trillion in official debt. That number grows by roughly $1 trillion every 100 days at current spending rates. The interest payments on that debt alone now exceed the entire defense budget. Think about that. We're spending more money just paying interest on money we've already borrowed than we spend on our entire military. There is no scenario, none whatsoever, where this debt gets paid back in dollars that have the same purchasing power as the dollars that were borrowed. The only way out is inflation. The government must inflate away the real value of that debt by printing more money, which makes each existing dollar worth less. This isn't conspiracy theory. This is basic mathematics and historical precedent. Every single fiat currency in history has eventually failed. Every single one. The average lifespan of a fiat currency is around 27 years. The dollar has been a pure fiat currency since 1971, which means we're well past the average expiration date. Now, does that mean the dollar will collapse tomorrow? Of course not. The dollar has advantages that other currencies throughout history didn't have, primarily the fact that it's been the world reserve currency. But that advantage is eroding, and when it goes, it will go faster than most people expect. Here's what most people don't understand about currency crises. They don't happen gradually. They happen suddenly, after a long period of gradual deterioration that most people ignore. It's like a dam with a crack. The crack grows slowly, almost imperceptibly, and then one day the dam breaks and everything changes in an instant. We're in the crack-growing phase right now. The signs are everywhere if you know what to look for. Countries are signing bilateral trade agreements that bypass the dollar. Central banks are repatriating their gold from storage in New York and London, bringing it back to their own vaults. The BRICS nations are discussing a new currency that would be partially backed by gold. Saudi Arabia, the cornerstone of the petrodollar system, is now accepting payment for oil in currencies other than dollars. Each of these events individually might seem insignificant, but together, they represent a fundamental shift in the global monetary order. And the people who understand this, the central banks, the sovereign wealth funds, the billionaires who have access to the best financial minds in the world, they're all doing the same thing, buying gold. Now let me address something important here, because I know some of you are sitting there thinking, okay, but I'm not a central bank. I'm not a billionaire. How does this affect me, and what am I supposed to do about it? That's exactly the right question to ask. And the answer is that you need to think about your wealth, your savings, your retirement in terms of purchasing power, not in terms of dollar amounts. If you have $500,000 in a retirement account, the question isn't whether that number will grow to $600,000 or $700,000. The question is, what will that money actually buy when you need to use it? If inflation continues at elevated levels, if the dollar loses its reserve currency status, if we see the kind of monetary reset that's being discussed in financial circles, your $500,000 might still be $500,000 in nominal terms, but it might only buy what $200,000 or $300,000 buys today. That's the real risk that most people aren't considering. This is why gold and silver have been considered wealth preservation tools for thousands of years. They're not about getting rich quick. They're about maintaining your purchasing power through periods of monetary instability, when currencies are being debased, when governments are printing money to pay their bills, when the financial system is being restructured. Gold and silver maintain their value because their supply is limited by nature, not by government printing presses. Quick aside here, because this is relevant to many of you watching. If you're sitting on $100,000 or more in retirement accounts, I've put together a comprehensive guide on how gold IRAs work. It's linked in the description below. This guide covers exactly how you can get physical gold into your retirement account without triggering tax penalties or early withdrawal fees. It's worth checking out if you're concerned about protecting your retirement savings from currency debasement. But let me get back to what's happening right now and why timing matters. The thing about major financial transitions is that they create enormous wealth transfers. Wealth doesn't disappear during these events. It simply moves from those who don't understand what's happening to those who do. In the 1970s, when inflation was raging and the dollar was losing value, people who owned gold saw their purchasing power not just preserved but multiplied. Gold went from $35 an ounce in 1971 to $850 in 1980. That's not just keeping up with inflation, that's a 24-fold increase in less than a decade. Now, I'm not predicting that kind of move necessarily, but I am saying that we're in a similar setup. We have massive government debt. We have a currency system that's losing its privileged position. We have central banks accumulating gold at record rates, and we have geopolitical tensions that are accelerating the move away from dollar dominance. Let me give you some specific examples of what's happening right now that should concern anyone holding significant dollar-denominated assets. China has been systematically reducing its holdings of U.S. Treasury bonds while simultaneously increasing its gold reserves. They're not doing this randomly. They're preparing for a world where the dollar is no longer the dominant reserve currency. Russia, after being cut off from the SWIFT payment system, has accelerated its development of alternative payment systems and has been one of the largest buyers of gold in recent years. They learned a hard lesson about the weaponization of the dollar-based financial system, and they're making sure they're not vulnerable to it in the future. India, with its massive population and growing economy, has been a consistent buyer of gold, both at the central bank level and at the consumer level. Indians understand gold in a way that many Westerners don't. They see it as real wealth, not just an investment. Even countries that are traditional U.S. allies are diversifying away from dollar dependence. Poland has repatriated 100 tons of gold from the Bank of England. Germany has brought back significant portions of its gold reserves from New York and Paris. These aren't hostile acts, but they are telling. These countries want physical possession of their gold because they understand that in a crisis, possession is everything. Here's something else that should make you think. The gold market is much smaller than most people realize. The entire above-ground supply of gold that's ever been mined in human history is worth around $13 trillion at current prices. That sounds like a lot, until you realize that's less than the market cap of just the U.S. stock market, and it's a fraction of the total global financial assets, which exceed $400 trillion. What happens if even a small percentage of that $400 trillion decides it wants to own gold as a hedge against currency debasement? The price has to go up. It's simple supply and demand. You can't create more gold out of thin air the way you can create more dollars or euros or yen. Gold has to be mined, refined, and brought to market, and that process takes years and enormous capital investment. Silver is even more interesting in some ways. Silver has all the monetary properties of gold, but it's also an industrial metal that's critical for solar panels, electric vehicles, electronics, and countless other applications. The above-ground supply of silver is actually smaller than gold in terms of investment-grade material because so much silver gets consumed in industrial applications and is never recovered. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has historically averaged around 15 to 1. Right now, it's trading well above that historical average, which suggests that silver is significantly undervalued relative to gold. If we see a monetary reset that involves precious metals, silver could potentially outperform gold on a percentage basis, though it will also be more volatile. But let's talk about what a reset actually means, because I think there's a lot of confusion about this term. When people talk about a monetary reset, they're not necessarily talking about some overnight event where you wake up and everything is different. What they're talking about is a restructuring of the global monetary system to reflect new economic realities. This could take several forms. It could be a new Bretton Woods-style agreement where major countries get together and decide on a new framework for international trade and currency exchange. It could be a gradual shift where more and more trade is conducted in currencies other than the dollar, until one day we realize the dollar is no longer the dominant reserve currency. It could be a crisis-driven event where a major currency or financial institution fails and forces a rapid restructuring. What all of these scenarios have in common is that they involve a repricing of assets relative to currencies. And in every historical example of monetary restructuring, gold has played a central role. Gold is the one asset that every central bank owns, that every country recognizes as valuable, that has no counterparty risk, and that can't be printed or created out of thin air. Think about what happened in 1971 when Nixon closed the gold window. That was a reset. The rules of the game changed overnight. Countries could no longer exchange their dollars for gold at a fixed rate. The dollar became a pure fiat currency. And what happened to gold? It went from $35 an ounce to $850 an ounce over the next 9 years. Or think about what happened in 2008 during the financial crisis. That wasn't a complete reset, but it was a significant restructuring of the financial system. Central banks around the world printed trillions of dollars, euros, yen, and other currencies to bail out the banking system. And what happened to gold? It went from around $800 an ounce in 2008 to over $1,900 an ounce by 2011. Now we're facing a situation that's potentially more significant than either of those events. We're not just talking about one country changing its monetary policy or one financial crisis being papered over with printed money. We're talking about a fundamental shift in the global monetary order, where the dollar's role as the world reserve currency is being challenged by multiple countries simultaneously. The implications of this are enormous. If the dollar loses its reserve currency status, even partially, the United States will no longer be able to run massive trade deficits and budget deficits without consequences. The rest of the world will no longer be willing to hold trillions of dollars in reserves if those dollars aren't needed for international trade. Those dollars will come flooding back to the United States, causing inflation that will make recent price increases look tame by comparison. This is why gold is so important right now. It's not about making a quick profit, though that may happen. It's about preserving your wealth through a period of monetary transition. It's about having an asset that will maintain its purchasing power regardless of what happens to paper currencies. Let me give you a concrete example of how this works. Imagine you're living in Turkey right now. Over the past few years, the Turkish lira has lost more than half its value against the dollar. If you had kept your savings in lira, you would have lost more than half your purchasing power. But if you had converted your lira to gold, you would have maintained your purchasing power and actually gained in lira terms as gold rose. Now you might be thinking, but I live in the United States, and the dollar is much more stable than the Turkish lira. And you're right, it is. But the principles are the same. The dollar is losing purchasing power, just more slowly than the lira. And if we see the kind of monetary reset that's being discussed, that loss of purchasing power could accelerate dramatically. Here's another thing to consider. The official inflation numbers that the government reports are significantly lower than the real inflation that most people experience. The way inflation is calculated has been changed multiple times over the years, always in ways that make the official number lower. If we calculated inflation the same way we did in 1980, the current inflation rate would be much higher than what's officially reported. This matters because it means your dollars are losing purchasing power faster than you think. If you're earning 4% or 5% in a savings account or money market fund, and real inflation is 8% or 10%, you're actually losing purchasing power every year, even though your account balance is growing in nominal terms. Gold doesn't pay interest or dividends, which is often cited as a disadvantage. But when you're losing purchasing power in cash, that interest or dividend isn't really helping you. You need an asset that maintains its purchasing power, and that's what gold does. Silver offers similar benefits with some additional upside potential due to its industrial demand and smaller market size. But silver is also more volatile, which means it can be harder to hold through the ups and downs. For most people, a combination of gold and silver makes sense, with gold being the larger position due to its stability and liquidity. Now, let's talk about timing, because I know that's what many of you are wondering about. Is now the right time to buy gold and silver, or should you wait for a pullback? Here's the honest answer. Trying to time the market perfectly is nearly impossible, and it's especially difficult with gold and silver, because they can be manipulated in the short term through the paper markets. What I mean by that is that most gold and silver trading doesn't involve physical metal. It involves paper contracts, futures, and derivatives that represent claims on gold and silver, but aren't actually backed by physical metal. This allows large players to suppress prices in the short term by selling massive amounts of paper, gold, and silver. But here's the thing, that manipulation can't last forever. Eventually, physical demand overwhelms the paper market, and prices have to adjust to reflect reality. We've seen this happen multiple times in the past, and we're likely to see it again. The key is to think long-term. If you believe, as I do, that we're heading toward a monetary reset of some kind, then the exact price you pay today for gold or silver is less important than the fact that you own it before the reset happens. Would you rather buy gold at $2,600 an ounce today, or at $5,000 an ounce after the reset has begun and everyone is scrambling to get their hands on physical metal. History shows us that during times of monetary crisis, physical gold and silver become very difficult to obtain. Premiums skyrocket, dealers run out of inventory, and delivery times stretch from days to weeks or even months. The time to position yourself is before the crisis, not during it. Let me share one more historical example that I think is particularly relevant. In 1933, President Franklin Roosevelt issued Executive Order 6102, which required all Americans to turn in their gold to the government at a fixed price of $20.67 per ounce. After collecting the gold, the government revalued it to $35 per ounce, effectively confiscating 40% of the wealth of anyone who had owned gold. Now, I'm not saying that's going to happen again. The circumstances are different, and there are legal and practical obstacles to such a move today. But it illustrates an important point. Governments will do whatever they think is necessary to preserve their monetary system, and they don't always respect property rights when they're desperate. This is one reason why some people prefer to hold silver rather than gold, or to hold both. Silver has never been confiscated by the U.S. government, and it's less likely to be targeted in any future confiscation scenario because it's more widely distributed and harder to collect. It's also why some people prefer to hold their precious metals outside the banking system, in private storage or in their own possession. If you own gold or silver through an ETF or a bank storage program, you don't really own the physical metal. You own a claim on the metal, which is very different. In a crisis, those claims might not be honored, or they might be settled in cash at a government-determined price rather than in physical metal. I'm not trying to scare you, but I am trying to make you think about these issues before they become urgent. The time to prepare for a crisis is before the crisis happens, not during it. And all the signs suggest that we're moving towards some kind of monetary restructuring, whether it happens gradually or suddenly. The central banks know this. That's why they're buying gold. The billionaires know this. That's why they're diversifying out of paper assets. The question is, do you know this? And are you going to do something about it? Look, I understand that this is a lot to take in. The idea that the monetary system we've lived with our entire lives might be fundamentally changing is unsettling. It's easier to just assume that things will continue as they always have, that the dollar will remain strong, that your savings will maintain their value. But the evidence suggests otherwise. The mathematics of the debt situation alone make it clear that something has to give. You can't borrow forever without consequences. You can't print money forever without devaluing your currency. And you can't maintain reserve currency status when you're running massive deficits and other countries are actively working to create alternatives. The reset is happening. It's not a question of if, but when and how. And the people who position themselves correctly before it happens will preserve and potentially grow their wealth, while those who ignore the warning signs will see their purchasing power evaporate. Gold and silver aren't perfect solutions. They don't pay dividends, they can be volatile in the short term, and they require secure storage. But they're the best tools we have for preserving wealth through periods of monetary instability. They've worked for thousands of years through countless currency collapses and financial crises, and they'll work again. So here's what I want you to do. Take this information seriously. Do your own research. Look at what central banks are doing, not what they're saying. Look at the debt numbers. Look at the geopolitical shifts. Look at the historical precedents. And then make a decision about how you want to position yourself for what's coming. If you have significant assets in retirement accounts, look into gold IRAs and how they can help you protect your purchasing power. If you have savings in cash, consider converting a portion to physical gold and silver. If you're young and building wealth, think about including precious metals as part of your long-term strategy. The reset is happening. The only question is whether you'll be ready when it arrives. Don't wait until everyone else figures it out and physical metal becomes impossible to obtain at reasonable prices. Don't wait until your dollars have lost half their purchasing power. Don't wait until it's too late. The time to act is now, while you still can, while physical metal is still available, while you can still make rational decisions without the pressure of a crisis forcing your hand. Because once the reset is obvious to everyone, once the mainstream media is talking about it, once your neighbors are trying to buy gold, it will be too late to position yourself advantageously. This is your warning. This is your opportunity. The big reset is finally happening. The question is, are you ready?